Hello and welcome to the Ripple Effect YouTube blog that comes out, also live written blog coming at you here and there throughout the day, throughout the week. My name is Brian Stutland of Equity Armor Investments, portfolio manager on a couple of mutual funds, and I'm bringing to you my thoughts on the Ripple Effect. So today we had a pretty wild day in the market, and what we really saw, we saw VIX and volatility pop. That's my specialty. That's where I grew up, in the VIX pits. So I wanted to give you my take on it. Obviously, things in the market can go up and down. And the one thing in this section of the video that I like to talk about is the 10-year note. That has gone up and down this year. When you've seen it move from, let's say, 1% all the way racing up to 175 and had a huge move this year, we take a look at that and then we see it back off, rates getting down to 125 now. So certainly huge moves in interest rates. What's driving that? Some people are saying, well, news out of Japan about the pandemic, in terms of no fans at the Olympics. Maybe that's a concern, that we're worried about coronavirus seeping back in. But there is something going on that's driving yields lower right now. And as we've done that, that's shooken up the currency markets as well. Obviously, the dollar rallying off its low. So a lot of a ripple effect going on from this movement in treasuries. The biggest thing that I've taken note of, though, is the huge rotation this year. When we saw rates moving higher, there was piling into basically value kind of stocks. And when rates back down to 1.25%, we've seen technology growth stocks rally recently. So there's been a big rotational play as interest rates are moving. And that kind of brings me to my next section here. If you're an investment advisor, what to do if you're an advisor now, today. So I think one thing that I'd be looking at really for my own portfolio is when I'm looking at asset allocation, that 60-40 mix of a blended modern portfolio theory, it hasn't played out that well. We saw interest rates when they were rising so sharply. If you were long bonds and long stocks, you struggled a little bit, right? Because basically what we saw is yields going higher. That means bonds going lower. That's been a difficult trade. So if you're a conservative investor, and I am at times, right, I need other areas, liquid alternative investments that I've been looking at to move out of. I'm probably the least amount of allocated personally myself towards bonds right now that I've ever been over the last decade or so, let's call it, because of this fear of rising rates. But now obviously we've seen this little bit of a rally. I plan on actually taking some of that off, some of those treasury positions that I've held. I plan on taking it off right here. That 1.25 seems like a good level. So what is going to zero? Well, let's find out. Let's see. If you're talking about what's going to zero, well, when I look at that, could it be the VIX and volatility is something that goes to zero? Well, I don't know, but you've seen the VIX trend down. This is, I got a nice little gray look here. Basically, I said I'm not shaving until I see the VIX pop above 20, because there's so much volatility in the bond market. Some of that's got to bleed into the equity markets. And when we saw the VIX trade at 15, I felt like the pop was coming. Now, we saw the VIX trade higher. It has not closed above 20, so I'm going to keep the beard growing until we see it trade above 20. I don't know if one thing I like doing, if we do get a vol pop like we've seen today, I'll rebalance my volatility hedge, take some off and buy stocks at a lower price like I did earlier today. So those are some of the things I'm looking at in the market, bringing to you the Ripple Effect. More to come. I'll bring in my partners, Luke Rabari, portfolio manager on our funds, as well as Joe Tige. Remember, subscribe, like the video. We'd love to have you more often here. Take a look at the disclosure. Obviously, this is just my personal opinion. This has nothing to do with Equity Armor's own investment opinion. And hopefully we see more of you here. Once again, this is Brian Stutland signing off.